Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and in today's episode, we're going to be talking about a company that I used to own. I sold out around $40 a share or so, and it is Chewy stock. This company is moving down big in the after hours. Let's go ahead and take a look at that. Searching it here on Google, we can see that Chewy stock is down about 9% in the after hours, not doing good at all. And so we're going to talk in this video what happened, what caused this company to fall down so dramatically. It's been a great growth story of a company that's finally turning to profitability, and we're going to talk about what I think this means moving forward. Is this a good thing for shareholders? Is this a bad thing for shareholders? Is it providing some opportunities now that the stock is dropping? We're going to go over all that in this video. And as always, if you haven't seen me before, my name is Jordan. I'm a Millennial Investor. This is my month-over-month portfolio balance, and we're about to update this here in just a couple days because the end of the month is near. And this is the two portfolio holdings that I have right now, which is Amazon and Salesforce. And I also have this portfolio tracker that I have here on M1 Finance between my growth and dividend growth portfolio, full of these 21 holdings in the dividend growth portfolio, and then these two in the growth portfolio that we just mentioned. And if you want access to the portfolio, if you want to invest in it yourself, it is down below in the description, so go ahead and check that out down below. There's also other opportunities like credit card referrals, Yada savings accounts, and all that good stuff, so go ahead and check that out. But without further ado, let's go ahead and get started with Chewy in its most recent quarter that it just came out with. So quarter two fiscal 2022 highlights. This is a snapshot of their earnings report for their shareholder letter. Now you can see that one of the main things I wanted to talk about here was the growth. The growth is obviously the big story, what you're looking for a company like this, okay? Let's go ahead and zoom in here so we can get a better look. Let's go to 150. So let's talk about this highlight real quick. A couple things I want to talk about. $2.43 billion from quarter two 2021 to today's quarter two 2022, and then net sales per average customer, which this is the one big highlight, the good thing, which is up 14.4% year over year. Now the hard part is this active customer at 20.5 million. You can see that it only grew 2%, 2.1% to be exact. Now the good news is that when they are retaining customers, people are spending more. On average, they are spending about 14% more year over year for every customer that joins every single time. $462 a year, that's almost $40 a month on average, which some of those spend many more than that. Now the gross margin has improved as well as the net margin, and then the net income and profitability is what we're probably going to talk about next. Now speaking of profits and losses, you can see that they write this little article right here, this little paragraph. Now they talked about in their previous quarterly earnings how they're trying to become more profitable. They're affecting some of their shipping and manufacturing to make their manufacturing facilities more efficient. Now their revenue growth, as you can see, it has been consistent. This is probably a little too zoomed in. Let's zoom out a little bit. You can see that it's steadily grown quarter after quarter after quarter, and they were able to technically grow this quarter a very, very small amount, basically flat. Now that is one of the first times we've ever seen that for this company, and we're now getting to a point where the growth is finally starting to slow in a significant way. Quarter over quarter, that's basically no growth. Now the one highlight is profitability is starting to finally get into the positive. You see all these years during 2018, 2019, even into 2020, this company really never made any money. They really lost money quarter after quarter after quarter, losing tens or even $100 million every single quarter. Now, going into 2021 and early 2022, you can see that this was starting to turn negative again and looked like it was going to stay that way, like it had been all the previous years before. But we're finally seeing some saving grace here. The quarter before, 18 million in net income, and then this quarter, 22 million in net income. And in terms of free cash flow conversion, very, very, very tiny little free cash flow being produced. Last quarter, 6 million, this quarter, 7 million, which leads to this tiny little increase in the balance sheet. You can see their cash pile slowly growing from 603 to 604, and now 606 million. So you now have a company that is no longer a money loser. If they keep this up or even grow this, that would be great for shareholders, because since this company isn't buying back shares, they're diluting you as a shareholder, going up from 415 to 420 million. You can see that they're diluting shareholders, which is obviously not good. Now, here's the big question. Will this company keep growing? Will they improve this revenue story, this profitability story? And here's what the guidance has to say. What's interesting is that we looked at this quarter over quarter revenue number and we said that, hey, it's not really growing anymore. They came in at 2.43 billion, and what are they projecting next quarter? The average midpoint between this guidance is 2.45. So it's technically still growing, but a very, very small amount, less than 1% growth quarter over quarter. This is incredibly small growth. And so year over year, these numbers of growth of 10%, 15%, 20% are going to start getting into smaller numbers like 5%, 6%, 7% revenue growth, and that is not good if you're looking for a big growth story and you're looking at this guidance right here. That would be 10% year over year growth and 11% for the year if they were to hit these numbers. But next year, going into 2023, you can see that the numbers are just not there anymore. The growth is not as good as it used to be. Now, the question is, if they turn this profitability metric higher, will this company be able to finally get some free cash flow and be able to hit some of that bottom line to grow this cash pile so they can buy out other companies, they can buy back some of their own stock? And I think the answer is yes. Just like with Amazon, one of the things we've seen with Amazon, if we go over to my little portfolio tracker here and we look at Amazon, okay? Now, it's great to look at this company in terms of its growth, but really what's important, like with Chewy or any other company, is its profitability. They're very similar business models in the fact that they rely off e-commerce. And if you look here, let's look at the profit margins for their business, excluding AWS in North America. You can see that in 2017, they did 2% margins. And then after that 2% margin, they went up to 5%. And then they floated around the 4, 3, 2% margin. They've been slowly increasing year over year. And this was a business that lost money for a long time. And at the peak, at one point, it actually hit 6% plus margins. Now, in the long term, it is going to continue to go up. Now, there's some rough times right here with the recession, and they're reinvesting back into their business. But generally speaking, it's been going up over time. And the same thing with the overall profit margin for the business, going from 2 to 3 to 4 to 5 to now almost 6%. Now, the same thing with Chewy, as they start to bring ads to their business, as they start to get to more profitable sectors, I think that the profits will be there. I think that it will finally start to come for this business. But what do I think about the company and its share price? Now, I sold my holding at 40, and I really needed to raise some capital, and thank goodness I did, because right now you can see from this price where we're at today, that's about a 15% downturn already from where I sold it at just a couple weeks ago. And so far, I think I dodged a bullet. Now, we'll look more into the future and decide whether or not I want to ever invest in this company. If it were to come back down in share price in a big way, if we hop over to the research tab here and we search in CHWY stock, you can see that the previous low it hit during earlier this year, it hit about $22 a share. If we were to get back into the mid to low 20s, I would definitely be interested in adding a position again. No doubt whatsoever. I did get out of margin, and that's what led to this outperformance recently while my portfolio started to skyrocket. And once the market started to go up, I started to cash up to get ready to buy companies like Chewy that are going down. But stay tuned. I'll give you updates as to whether or not I think this company will continue to grow, whether I think the profitability metric will continue to go up, because this is what I want to see. I want to see this company get back to big revenue growth numbers when the recession ends. I want to see 8, 10, 12% revenue growth sustained, and I want to see this profitability metric go way past these little bitty $10 and $20 million numbers. I want to see $50 million profits. I want to see $100 million profits, because that's what gets me excited as a shareholder. But other than that, guys, thank you so much for watching. I appreciate you watching all the way to the end. Check out all the stuff down below in the description, and I'll check you guys next time.